Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 5th of February, 2023. And last week, we saw gold and silver prices plunge on Friday. Today, we shall look at how gold and silver performed and what caused that plunge. Okay, we shall kick off in traditional fashion by looking at prices and movements, not just of gold and silver, but equities, oils, and dollar values too, and then discuss why gold and silver prices fell so sharply. Now, before we do that, just a quick shout out to our gold and silver price forecast for 2023, a link to which we've placed in the description box below. Right, let's get back to what happened last week and what we expect this coming week. Gold fell $61 last week, yes, $61, falling from $1,928 to $1,866. Having hit a high of $1,959, so it was on a bit of a tear, and a low of $1,861, a fall of 3.2%. In sterling terms, it finished the week at £1,547. That's down only £9. But that's to do with the strength of sterling, and in euros it closed at 1,728 euros. That's down 47 euros. You see, the Bank of England raised rates by 0.5% last week. At the same time, the Fed raised its rate at 1/4. Therefore, sterling reigned supreme, at least for a few days. We shall see how long that lasts. Now, silver performed even worse than gold. It fell $1.24, falling from $23.61 to $22.37. Having hit a high of $24.64, so that was on a bit of a tear too at one point, and a low of $22.31, a fall of 5.26%. Now that's 3 weeks of consecutive reductions in the price of silver. In sterling terms, it closed at £18.57, that's down 49 pence. And in euros, it closed at 20.75 euros. That's down €1. Obviously, because of this, the gold to silver ratio rose from 81.6 to 1 to 83.4 to 1. Now, the difference between gold's high and low was a whopping $98 compared with $38 the previous week. And the difference between silver's high and low was $2.33 compared with the previous week's difference, which itself was quite elevated at $1.43. Now, we predicted last week that we anticipate to see gold trade within $1,875 and $1,975, with $1,850 and $1,995 as outliers. And it traded for the most part within our normal trading range bracket, but did close towards the top end of our outlier low bracket, if that makes sense. A few dollars above, or a fair few dollars above our ultimate low. For silver, we envisaged silver would trade between $22.25 and $24.50, with $22 and $25 as outliers. And again, like gold, it traded almost entirely within our normal bracket. It actually closed within our normal bracket, but did for a brief moment move into our outlier territory, but again, comfortably within it. Now, before we delve deeper into what happened to gold and silver, let's take a look at other financials. Bitcoin currently stands at $23,361. That's up $391 on the week. The crypto market has done quite well these past few weeks. Though the Dow, looking at equities, was down on the week, both the S&P 500 and Nasdaq were higher. The Dow closed on Friday at 33,926, down 52 points on the week. The S&P 500 closed at 4,136, up 66 points on the week. And the Nasdaq Composite closed at 12,006, up 385 points on the week. Don't be surprised if you see cryptocurrencies and the Nasdaq move together, because whatever the Nasdaq does, the crypto market seems to follow. Now, looking at oils, a little bit of good news. Thankfully, they were lower this past week. Brent crude closed at $79.94, just shy of $80, down $6.72. And WTI crude closed at $73.39, down $6.29. Part of the reason for gold and silver's fall, the dollar index was up a full point on the week at 102.91. So let's now take a quick look at what happened to gold and silver prices during the course of the week. So if we take a quick look at the chart last week for gold, we can see that when gold opened, it more or less, for Monday, stayed reasonably constant. It dipped on Tuesday, resurrected on Tuesday afternoon, evening, sort of stayed pretty stagnant Wednesday until late GMT on Wednesday, when it rose quite substantially, but fell back Thursday, and then on Friday literally plummeted. And if we look at silver, we can see a very similar pattern. More or less stayed the same through Monday, dipped on Tuesday, resurrected late on Tuesday, more or less stayed the same, then began to rise on Wednesday into Thursday peaking, falling back towards the end of Thursday, and then a massive dip again on Friday. So why did we get that rise on Wednesday, Thursday, and the dramatic fall on Friday? Well, two things happened really. On Wednesday, the FOMC raised rates by just 0.25%, compared with 0.5% in December and multiple 0.75% prior to that. This immediately gave the impression that the Fed was becoming more dovish, and this was now nearing the end of interest rate rises. However, statements made by the Fed that in short they would continue raising rates until they reach at least 5%, but will do so over a slightly longer period of time, were not really believed until Friday, when the non-farm payroll report came out, which showed the jobs position far stronger than anyone expected, and showed that the Fed could get away with higher rates without tanking the economy, and may be able to continue doing so throughout most of 2023. So taking a look at the figures announced last week, not a great deal happened really on Monday, except perhaps the consumer confidence index came in slightly lower than expected. Then on Tuesday we had the ADP employment report, which was much weaker than anticipated, with 106,000 new jobs for January compared to 190,000. Then later on Wednesday we had the announcement of the increase in the Fed funds rate by 25 basis points, so that the Fed funds rate now is 4.50% to 4.75%. This obviously then affected markets, because the markets thought employment is not as strong as they thought. The bank has raised rates at 0.25% rather than its usual 0.5 or 0.75. Therefore, this dovish tone enlightened, or lighted the spark, frankly, under the market. However, towards the latter end of Thursday, for no apparent economic reason, markets started to become wary, and we saw prices begin to fall in anticipation perhaps of the non-farm payrolls. Who knows, perhaps something leaked. And we could see jobs for January at a phenomenal 517,000 new jobs, compared to expectations of 187,000 and 260,000 being produced the previous month. And that is what primarily caused the major fall on Friday, with the markets thinking, crikey, the environment has not been adversely affected, the economic environment, by raising rates, so the Fed's promise to continue raising rates throughout 2023 could in fact happen. So specifically looking at precious metals, for sure, they got hammered on Friday. What is interesting though is that their highs for the week were greater than the previous week. And whilst we now expect a short period of price suppression, we're still confident that later in the year we shall see all-time highs for both gold and silver. Though, as mentioned in our forecast, we do expect silver to lag gold this year, but will come into its own in 2024. So, where is gold heading short term? Probably close to its 50-week EMA of $1,800. Depending on investors' mood, this could force gold down ultimately to 1700. But it will take quite a few weeks to get there, if it ever does. To the upside, $1,900 will be resilient, but the biggest hurdle to surmount is that mystical and magical $2,000 level. Silver will again, like gold in our view, regress towards the 50-week EMA at $22, where there is significant support, but again, depending on sentiment, could in the weeks ahead dip back to 21. To the upside, the most strong resistance barrier is undoubtedly the psychological $25 level. But with the jobs figures announced on Friday, it's going to be some time, weeks if not possibly months, before we can expect to see silver breach that magical figure once again. That said, in our 2023 forecast, we do predict that silver prices will be above the $25 level by the end of the year, and most likely will trade in the late 20s. So, for this coming week, we anticipate to see gold possibly follow through with Friday's fall, but then consolidate a little. Therefore, trading between $1,800 and $1,900, with $1,775 to $1,925 as outliers. We envisage silver will trade between $21.50 and $23.50, $2 spread, with 21 to 24 as outliers. And before we go, if you're considering thinking about purchasing gold and silver, then do make contact with the Pure Gold Company, again link below, who are only too happy not only to discuss short-term purchases and sales, but also long-term strategies and retirement considerations. They will also offer you a discount or special terms if you state you were referred by Illuminati Silver, and in the light of transparency, we too will receive a small consideration if you use their services. Meanwhile, thank you so much for listening. If you haven't done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And as always, we wish you a safe, enjoyable weekend and a prosperous week ahead. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.